In this chapter, I will explain about money methods and payment, where in the money methods and payment, we are going to study about bank and banking, check, and bill of exchange. Banks and banking. Banks and banking, there are two main types of bank. One, central banks. Two, commercial banks. Central bank. Central bank has a number of different functions. A, to issue banknotes and coins, the country's currency. These notes and coins are legal tender in the country where they are produced. This means that traders in that country may not refuse them when they are offered as payment. B, to look after the country's gold reserves. C, to make sure that the country's currency keeps its value. D, to act as bankers for the government and the other banks. E, to keep inflation under control. Inflation happens when there is a lot more money in the form of banknotes and credit available than there are goods for sale. In other words, when demand for the goods exceeds supply. When this happens, prices increase sharply and often. To stop it, the central bank needs to take money out of circulation, for example, by increasing interest rates. This makes borrowing more expensive and means that fewer people will apply for credit. And by increasing the amount of money which all banks have to deposit with the central bank. Commercial bank. These are public or private banks which people use for their everyday money matters. If you have a bank account, for example, it will be at a commercial bank. There are three basic types of bank account. One, current account. Two, deposit account. Three, investment account. Another function of the commercial banks is to provide credit in the form of overdrafts, a loan, and credit cards. Other commercial bank services include 1. Standing order facilities. 2. Direct debit facilities. C. Advising their customers on making investments, for example, in gold, property, or shares. D. Save facilities for their customers to lock up valuable articles such as jewelry or important documents. E. Providing foreign currency and travel check. F. Paying out cash, for example, from cash dispensers and accepting cash deposits. G. Providing checks and carrying out check transaction. The second part is check. Check is a customer written order to his bank to pay a certain amount to a certain person or organization when requested. As we already know, a check can only be drawn on a current account. Furthermore, checks are legal tender. That means sellers are not obliged to accept checks as payment. They are generally only used for domestic trade. So, which parties or who are involved in this checks thing? First, drawer. Two, drawee. A third, payee. So the drawer writes the check and give it to the payee, and the money is debited from her or his current account. The drawer's bank is the drawee. In this case, The check is drawn on the NatWest Bank. NatWest is the name of the bank here. And the payee get the money either in cash from his or her bank or pay directly into his bank account. There are many kinds of check form. Every bank has different form of check, but the parts of the check are almost similar, like the payee's name, the amount, the check number, the bank's code, the drawee bank's account number, the drawee signature, the date on which check was drawn. Here is the sample from First Bank of Wiki, and then here the second sample check from HSBC Bank, Malaysia, and then here the third is a sample from Barclays Bank. So the drawers on the right side draws the check and gives it to the payee left side, and the payee fills out the paying in slip and gives it and the check to his bank, and then the payee's bank to drawee. The payee's bank presents the check to the drawer's bank, and then the payee's account is credited and the drawer's account is debited.